Hello everybody, Carlos here from For Oct and welcome to another forecast video. Let's get right into the forecast review. We were standing aside on all the markets, so we need to come from the weekend and assess the market accordingly. So let's get started with the dollar yen. As you can see, the market just finally kind of find a bottom in the bottom part of these 1, 2, 3, 4 times bottom formation, 4 or 5 time bottom formation support line area. But very clearly we can see that the market made some visually represented valleys and spikes. So let me just put them over here so you can understand. And we'll have a review of how to assess the market based on price action, okay? So if you notice here, I'm just plotting here the most important swings, okay? All right, so let's do that. And from right to left, that's how I analyze the market. I see that the market has taken this low but did not took this most important low, and this low is even higher than the most important previous low, so that's good. It's kind of a intended upward move, right? Then it's coming from this important pivot high, and this high took the most previous important high, meaning a formation based on price action. It's kind of double confirmed in this level. So the most important primary high is this guy and this low. Why do I say that? Because it's not until this guy is penetrating towards the upper side that we can validate a complete reversal of the price action. But on the bottom formation though, the most important low, which is the lowest low, has not been violated by 1, 2, and 3 times, meaning that the market is having a real hard time continuing towards the downside. That's good. Coming back to this low, since this is the most important low, it is the lowest low, it also comes from the most previous highest high that the market has done that has not been penetrated or violated yet, meaning that in quotes we're still kind of in a downtrend momentum, but as the market progresses, the market's supposed to pull back up and continue and take this low. Now the rejection of this low being penetrated is our first warning signal for the market not intended to continue to the downside. Good. Next, we notice that the market did a high here, and the next pull up or retracement actually took out that high that is coming from the lowest low. This is the second indication of a probability of a bottom support being formed and confirmed. That's absolutely great. So the next thing that we need to do is wait until this high it's taken. Now the way that we work this out, and I'm on a 1-hour chart, is I plot 2 pivots, a pivot step just like so, see? Because this is kind of like the trend that the market is working at right now. And basically the third level of confirmation for my taste would be prices taking this pivot high or trend line resistant to the upper side, and that will indicate the third and probably fourth tendency for the market to continue to the upper side. So I'm being more inclined to take a little bit of a risk and probably even buy on that market and place my stop anywhere around this level. By then I will know that the market, let's just say that they give us a close above in this level, will give me a risk of about 70 to 80 points, and we use the streetwise money management technique and say, can we risk 120 on a full contract? No, that's way too much. 410, yeah, I can risk probably 410, half a standard contract. If it's too much for you, maybe I can go with 200. Well, I go with 0.25 or 2 mini lots on this trade. See, now the width, take a look at this. This could translate into kind of a triangle, right? Remember, this will be the width. And from the breakout, the market should move about 93 points toward the upper direction. Okay, so we have now made an overall analysis spectrum of the dollar yen based on what we expect. We go to the 4-hour chart and check the MACD and check it out, overload 20. So everything kind of it start pulling together into the same direction, isn't it? So I'm pretty much comfortable and feel comfortable with the analysis that we did. So it's all just a matter of waiting for this to happen. Now we got here a higher level of pivot step. I kind of use that as well. The reason that I do that, let me show it to you. I go back to the 1 hour. If I get a buy signal, guess what's going to happen if they reach this area? You guessed it right. This could translate in a potential resistance point, meaning that the market should hit it and come back down. It doesn't mean that it's going to continue down, but this is the area where I'll find more important resistance point. And if I compare that, assuming that they break above this level, it's about 30 points lower than the complete 97 points that expected move if they break would have been in this area. So I just trying to open up your mind, thinking outside the box based on price action and study the market accordingly. In the meantime, we're going to be standing outside from the dollar yen until this happens. But this is a welcome back to trading. Very in-depth analysis and training for you, so to understand how to read price action accordingly. Just make sure to start this video back if you're confused and make sure this happens. And last, for the final confirmation that the market indeed is going towards the upper side, after explaining the multiple levels of confirmation, is that the moving averages cross back up towards the upper side like they did in here. And obviously the wider apart they get, the better and the longer the sustained trend will be. All right, so that's it for in that area. Australian dollar, the market just sideways on the top, and we'll go to the 4-hour chart. It's kind of having a hard time continuing towards the upper side right there. And take a look at this. The market had this previous pivot highs over here, same problem area that they found in there, and every time that they tested, they try to come back down pretty heavy. So this is kind of a bullish market. Give me 1 second. But with a very uncomfortable resistant area being in control right now. Personally, I am not going to be trading into this market, and I'm going to wait until I see they kind of cleared out all this clutter that they're kind of forming as we speak right now. Okay. All right, euro dollar. Now euro dollar finally found the top formation right there. We go to the 4-hour chart, and I see that they are coming below 20, but these guys crossing kind of widen back towards the downside. So it looks like the correction is going to be closer than expected, and price action is taking all the control in here. Take a look at how nicely the market just pulled back down in this area, and they took the most important lows here. So we're gonna play it out, the most important rule of trading, which is trade with the trend. I'm sorry, trade with the trend. In this case, looks like it's going to be towards the downside. So I created a synergy zone below 35.84, 36.11, and we're going to be targeting 35.24, 35.01, and 34.75. That's going to be the cue for us to short this market accordingly. Now, let's just add up what if into the trade, right? Because that's what we do here in For Oct, and that's what I want to teach you. We have plan A and plan B, and everything must have a contingency plan of action if something doesn't go our way. You know that we have a certain rules for confirmation of our entry. That's going to be, for example, the market coming back towards the zone, the closer the better, and leaving behind some pivot so we can use those as support. Once they break, this is kind of a confirmation. Moving averages continue cross towards the downside. That's another level of confirmation. And the most recent pivot high that we're going to place our stop just about 15 to 20 pips initially above that level, just in case the market try to retest it again. So we have tested and proven that 15 to 20 is a very acceptable level for us to place that, so the market can come back and not even take us out and continue towards our direction, so we don't get cut off in the middle of the stop loss hunts. And we use what the market has done to the width of the triangles to plot the most initial potential first level of targeting, or in this case support that turns into our targets, and compare those with the calculations that we receive um, every day based on the big time players level that they usually go for. So basically, I receive those numbers, compare those with the actual price action, and then we choose the one that has the highest probability. Hence, the reason why you've seen the prices hit by the tick many times on our way. All right, so this is the contingency plan. But if the prices doesn't go like that, we need to ask the question, why would that be? Don't just accept the things as it is. You always want to know the probability of the reason why. It's just because when you reach that point of understanding the why, it's the only way to hone your skills and increase the intuition into trading, which it translates into a very successful trading career for all of us. So that possibility for the market, what if the market doesn't come the others, towards the downside? Why would that be? Well, we go to the 4-hour chart and try to assess the possibility of that happening. And the only thing that I can I can probably think of is, you see how conglomerate this area it's been for quite a while, not having the market continue towards the upper side. And I noticed like a common denominator around this level right here. Let me put my crosshair right there, meaning that the area of 35.41 has turned to be a very heavy resistant point area that has been violated. And what happens when the resistance is violated? It turns into support. So even if we get a sell setup, the way that I see it is that 35-ish 30 to 40 area could translate it into a strong support area as well, meaning that even if we got all these targets all the way down, we can find some sort of a potential problematic area around that level. Cutting short our potential of profits, it doesn't mean that we're not going to play it out. All I'm saying is that I'm going to pay close attention when prices reach those levels. Yeah, right? That's the whole point. But the plan is a plan, and we stick to it. But if the prices come and hit that level without hitting our targets and coming back up, we already knew that would be able to happen just because of the prior resistance and support levels. Okay, so that way we're prepared, and we can just minimize our exposure into the trading by liquidating our price immediately, half of our positions, so to speak, and moving our trailing stop even to break even, and so on and so forth. This is how we're gonna play it out. Okay, hope that works out for you as well. On the other hand, when we go to the momentum base, we can see that the market should be giving us a very nicely run towards the upper side until the next level of 80, meaning that this could translate as well into a bigger sideways situation. Let's go to the daily chart, and I can certainly see that happening over here as well. But honestly, this is an extremely overbought market, and a nice correction must be on its way, and we're pretty much well positioned into a nice run towards the downside. Let's just see if we just can manage it correctly and take the most out of it. The same thing will apply, same explanation will apply to the British pound. All right, so here it is, very nice sell setup. Check the video below, as we call this since Friday. See the original pivot stat, it was back up right there, and right at the end of Friday, the market just shut all the way down. If we go to the 4-hour chart, you can see the cross happening pretty much at the end of the day. Very nicely well supported in terms of those who took a pivot step entry on those levels. Here's a pivot step at its glorious moment here. This is the entry right there. That would be the stop if you were a kind of a maverick trader, and taking the pivot step entry right there, you would have risked about 90 or 100 points, so around that level. And the width of the triangle would have put yourself into 132 from the break, and 132 would have been over here and surpassing, the trade went pretty much nicely. All right, we were standing aside once again because the market was a little bit confused by that time. But I want you to see the clarity of what is the pivot step, the price action, that dynamic way of approaching. No emotions into the trade, just plain and simple taking any opportunity out there. That would have played out greatly. The way that we play it out now is that I have a clear cut from this pivot step initially, and remember that I talked to you about this support. Here it is, confirmation. Now we're waiting for a pullback about 60.92 and 61.39, targeting 59.61, 59.19, and 58.52. Everything looks absolutely okay and very nicely. Let's go to the forward chart and see what the MACD is indicating. It's indicating a cross towards the downside. It's wide apart, but take a look at this. It looks like it's reaching below 20. So let's move on into the contingency plan. And what if? Then what if that we get a sell setup and the market doesn't move as we can expect it? Well, the reason is because based on the 4-hour chart, it looks like the momentum is kind of dying out. But remember, this is just a warning signal. So this can probably give us one more chance to the downside. And if you ask me, this pretty much looks like a very nice first run for wave 1. Pretty sure we're going to call this a wave 2 setup. So we're pretty much well positioned into a beginning stages of the third wave down, which will mimic the expected move of this downward guy right here. So if this guy moved this much, depending on where the pullback would be, which we don't know, you can measure that and then take the end of that pullback, hopefully within this zone, and that will give you the expected target towards the future right here. And it could translate into any one of these guys right here as well. That's pretty neat, isn't it? So let's see how that works out. Everything is a plan. We got to lay it out, and the contingency plan would be that if the prices pull back up and give us the entry, we'll move our stop as soon as we see 20 to 40 pip of profit, liquidate half of our positions and trail our stop accordingly. And perhaps maybe we could start seeing a potential bounce or sideways situation just like they did before in here, just for the fact, as in the euro session, in the euro market, the market is just hitting that level of a huge support base level that was battling against this prior resistance. Once they broke, they should the resistance turned into support, and that's where they are right now. So it's just a matter of paying close attention to it and manage the trade accordingly. But on the overall, we're going short. That's the synergy zone. These are the 3 target price for us, and that's it for now. This is Carlos Diaz from For Oct, and I'll see you on the next forecast.